Hello traders, here we are again with another video about the fractal analysis and fractal trading. If you have watched my previous videos, you know that I analyze the chart in a fractal way, and fractals are geometrical shapes that repeat in different dimensions and different zooms. If you zoom into a fractal, you see the same patterns, and if you zoom out, still the same. So I look at the chart in a fractal way. There are highs and lows, and there are trend lines and resistance lines. That's all I need. I don't need anything else. So if you go up the chart 4 hours, you still see highs and lows. If you go down, doesn't matter where you go, the chart looks the same. It's highs and lows. You can draw some trend lines and then support and resistance line. That's all I need. Now, some of you in the previous video have asked, where do I exactly enter and how much is the stop loss and how much is the target? I'm gonna talk about that, but from now on I'm gonna add moving averages to the chart. So far I've talked about the price action, only the naked chart, and how you look at the highs and lows and connect them, and the beginning of a trend, end of the trend, something like that. From now on I'm gonna talk about the moving averages, how we can use them, utilize them to analyze the chart in a better way, an easier way, so we can see more trading options, more trading opportunities, more entry spots, so we don't need to wait for a long time to get one entry. If you've watched previous videos, you know that I normally at the beginning of the trend, which is here now, what I do, I connect the highs and lows, and I normally look at the major ones, not the small ones. So from top, this is what I see. Let me change the color to blue. That's what I normally use. So I start connecting the highs and lows, something like that. These are the major ones that I normally see. So it's based on your eyes. You must see different highs and lows than me, and everyone is different. That's why you cannot copy anyone. You must learn the rules and you do it yourself. So at the moment, market is like that. This is what I see. You might want to consider this area one high, but because it's a current, I normally go deeper. So when you go to the lower time frame, you need to see these highs and lows. The second thing I do, I connect them, the highs, this is a downtrend, so I need to connect the highs to have a trend line. So that's the first one. I can go something like this a little bit, cut the top one, maybe connect the bottom one, so I can get one single trend line. This is what I like. The other thing is that when the price at this area, let me grab my pen. Okay, as you can see, the price breaks through the trend line here and then goes up, comes back down, and it's kind of stuck in this area. We want to find an entry position, the entry spot, but the best entry spot, so we have a higher chance of winning that trade. As I've said before, whenever the price breaks a trend line, whenever the price breaks a support and resistance line, whenever the price breaks through a moving average, do not trade that breakout. That can be fakey and it can hit your stop loss. Wait until the price goes up, which in this case is an uptrend. The price goes up, comes back down, and then buy. This way you can be sure that the price gonna go in the direction that you normally want to. Now, where we can find, I'm gonna buy here, okay? Let me show you where. At this point, I'm gonna buy there, right? And you must ask why. How do you know the price gonna come back down at this area and then goes up again? There are some ways to determine that. The first one, when the price goes up, break through the trend line, these highs and lows, if you connect them, as you can see, most of the time this happens. The price breaks through that line too and comes back on top of it. It can go through it, which in the second area, let me draw this. You see these lines? It can go through that pink line, comes into this area down here. If the price comes to this area, you can buy. If it stops there, you can buy. Actually, you can buy both because you don't know where the price gonna stop and reverses back. So this line here is very important. These areas after the price breaks through the trend line. Okay, remember that. After the price breaks through the trend line, these areas are important. The other part, which is normally don't, the gurus, the people who are traders don't talk about. You see this area? When the price breaks through a support and resistance line and comes back to it and hits that area and falls, in this case, which is a downtrend, that line is very important because it connects the highs and lows together. Remember that the highs and lows together, when they're connected, they are very important. This pink line is very important because it connects some highs and lows. There are one low here, there are one high there, and the third one, which again the price breaks through and comes back down. This area, we have two lows. The price at this area breaks through, comes back up, and then falls down again. The next time when the price breaks through the trend line, comes back to this area. This is a very important area, and price gonna react to this area. Either gonna stop, reverses back a little bit, maybe it slows down. Something gonna happen that stops the price from the previous move. Whatever the price was moving, which is in this case very sharp move, the price gonna stop at this area. Why? Because this line is the connection between some highs and lows. It's very important. Now, how much is gonna go up? Normally, if you see the bottom down here, it goes all the way up. The 50% of this is very important, which is almost around this area, right? The price gonna come most of the time, again, not always, most of the time to this area. Either gonna stop a little bit higher, either gonna come back exactly at 50%, or if they're gonna go like to 60, 70, 75%, which is again at this support line here. So these three areas, the price gonna come back to. So you can have your trades, your lot size, whatever it is, divided by 2 or 3 at least. The first one, when the price goes halfway down, you can enter. The other one, if the price goes down more than 70%, 75%, you can enter another time. Maybe the price just jump back up like this time. The price didn't go to the 70%, 1/3. So you can have half of your trade and have some profit. Now, let's talk about the stop loss. When the price breaks through the trend line, see from down here, it goes up, breaks through the trend line. That low in this area can be your stop loss. So you can put your stop loss down here. You enter at this area, your stop loss is down here. Your target, you can go to the top, or in this case, you don't care about shadows, you can go to the top of the actual candles, which in this case hit the target. Your reward to risk ratio is gonna be very low, okay? It's less than 1. That's why we use fractal trading. We're gonna go to the lower time frame, and I will show you in this trade that how you can pinpoint your entry. But from one single time frame, that's how you do it. Your target is at the top of the previous high in this area. Your stop loss is at the previous low. Your stop loss should be based on the price action, okay? highs and lows. Remember that. That's why you mark the highs and lows. When the price, when your stop loss is down here, it's a very, very low chance that the price is gonna drop that much to hit your stop loss. Sometimes it does, but it's very rare. It's like a 5% or 10%. But it will hit your target most of the time. You just have to be patient and you must enter at the good position. Now, we're gonna do it in a fractal way. This is a 1 hour chart. If you've watched my previous videos, you know that we go to the lower time frame, which is 10 to 20 times smaller than this time frame. So in 1 hour chart, 15 minutes is not, 1 minute is 1/60th, which is not. So we have 5-minute chart. I have marked the area that I want to enter and I take it to the lower time frame. So in 5 minutes, you can see we have this big move up and now it's down. We're gonna enter at one position. Again, if you watch my previous videos, you know that we do the same thing that we did in the higher time frame. We follow the same rules in the lower time frame. So again, I'm gonna draw some trend lines, support and resistance lines. So that's our trend line. Let's go to draw some support and resistance line. We have one down here, one up there, and another one here, and one up at the top. Okay, let me delete that. Now, again, we follow the same rules, remember? The price goes up, breaks through this trend line, comes back down, and it goes up again. And hits the previous high. You know, you see, this is the 50% of the previous, all this high. See, if you measure that, it's almost like a 50% of that. So if you enter here, your stop loss will be at the previous low before the price breaks through the trend line. You put your stop loss down here, your target's gonna be at the high, or you can go higher in the next, like a resistance line, which is one up there, another one up there, which is your chance of hitting that target is gonna go lower and lower as you expand your target. I want to be sure that my target is hit at least 90-95% of the time. That's why I put my target at the previous high, and the price, the first move, it comes up and hits my target. You can do whatever you want. I don't know. Go back. That's what I always say. Go back and back test it. Draw some trend lines and support and resistance line. Whenever the price breaks through this trend line and it goes down, have at least 100 examples, 100 trades, and have a numbers. Say, okay, 75% of the time, let me clean all this. 75% of the time after the price broke through the trend line and came back down, it actually hit the top, the previous high. Like 60% of the time hit the previous high, which is the resistance, and maybe like, I don't know, 30, 40, 50% went to the previous high again. So I have a better chance, better risk to reward ratio. You have those numbers and then you go and forward test it. I have the best numbers at the previous high. That's why I always put here. My stop loss is down here at the low, previous low, plus the spread, whatever spread is. Normally I have 90% chance of hitting the target. It's a very highly accurate signal. You don't need any indicators, you don't need anything else. Just wait for the price to break through the trend line, comes back down, and then you enter. That's it. A stop loss at the previous low, target at the previous high. Done. Now, I'm gonna talk about moving averages, right? I'm gonna make your job a little bit easier. So let me clean the chart a little bit. Maybe go to a higher time frame and I add another moving average. So moving averages, normally people use like 10, 20, 50, 100, 200. These are the ones. Trend, okay, moving average. I have 50. I'm gonna use 50 as the main one. I normally use exponential we're gonna talk about these. Why exponential? Why not the other ones? People normally go to the close. These are important. You have to know your moving average is based on what? Close, open, high. I normally go for the median price. I want to know in the middle of the candle. Here you can set a color, which I normally use black, and then add. That's the 50 moving average. The important thing about the 50 moving average is technically the trend line. It's a little bit more accurate than the trend line, but price touches that moving average more than the trend line. Look at where the trend line is broken, which is here at this line. The price broke through the moving average as well. It went up, came back down. It's closer to moving average than the trend line. In the previous time, as you can see, the previous trend line has been probably like that. So when the price breaks through the trend line downward, it breaks through the moving average as well. As you can see, price break through moving average many times. But that area is very important. This area down here is very important. That's how you can use a moving average as a trend line. So this is the higher time frame. If this happens and the price down here breaks through the moving average and trend line, you can take this to the lower time frame and do the same thing. So let's take it to the lower time frame. This is 5 minutes. Down here, the price breaks through downward, but we're gonna buy, okay? Comes back, the moving average is acting as a resistance line. Goes up, is fluctuating. Finally, it goes up. Comes back down, touches the moving average, and then it goes up. Comes back again, goes up and hits the previous high. Here, if you enter there, your stop loss should be down here. Why? Because that's the previous low. This area is a sideway market. You must put your stop loss below this. Remember, before we entered at this area. Now we enter at this area. It's a more accurate signal. It's the same thing, same rules. At the higher time frame, price broke through the moving average, came back down, and then we entered. We take that area to the lower time frame. By entering, I mean take it to the lower time frame. It's fractals, right? We go to the smaller fractal. In the smaller fractal, we do the same. Price break through the moving average, comes back down, we enter at this area. It's the same thing. You draw these support and resistance lines if you don't know where to enter, because price is fluctuating around the moving average. Whenever you have a high like this connecting 2-3 highs or 2-3 lows, it's a sideway market. I normally don't trade the sideway market. Sometimes I do, sometimes I don't. But my chances are higher in a trending market. So I wait until the price breaks through this trend line, because, and how do you know that the price gonna, which way the price gonna break this sideway market? If you've done your analysis correctly at the higher time frame, you are waiting for a buy position, okay? You expect the market to go higher, because in the higher time frame you had a lower trend, you had a downtrend, which the price broke through the trend line upward. We want to buy the market, so we have to wait until the price breaks through sideway market upward. So it breaks up, comes back down, touches the moving average. Moving average acts as a support and resistance line. You enter at this area, one of these candles, and then ride the market up. It doesn't hit your target. Target is up, right? It comes back down again. You enter again. Remember, you enter your half of your lot size here. You enter another one half here, and then ride that wave with both of your positions to hit the target up here. And both of your stop loss is going to be down here. It's less than 1-to-1 reward to risk ratio, but it's a very highly probable trade. I promise you it's going to be more than 90% probability of hitting your target. So I hope you enjoyed this kind of analysis, and I hope you can use moving average as a kind of a trend line and support and resistance line. In the next videos, I'm gonna add more moving averages and talk more about moving averages, and we can apply them, how we can use them in different types of market, sideway markets and trending markets, like that. If you have enjoyed my videos and if you've learned something, a subscribe is appreciated. Subscribe to my channel and hit the like button so you know when I publish new videos. And if you know someone, share this video with them. There are so many traders who need this information. There's so many confusing information in the market. Share this with them. Hopefully they can learn and shorten their success time. I hope you enjoyed. Have a good time. Bye.